2016 has been a busy year for hotel transactions, particularly on the eastern seaboard, with nearly $800 million worth of hotel sales completed. In New South Wales, it accounted for 60% of that, almost $500 million worth of transactions, albeit in a much more attractive interest rate environment where average yields enjoyed a 400 to 500 basis point spread between cost of debt and earnings. Transaction volumes accelerated in the second half of the year, and expectations are high that more sales are anticipated to be consummated prior to Christmas. At JLL alone, we have nearly $100 million worth of sales to either finalise or announce in the coming days. The year also saw some wonderful iconic hotels sold, exceptional high-profile assets including the Fox Hotel in Brisbane, Melba's on the Park in the Gold Coast and the Portsea Hotel in Melbourne. As always, the spread of balance sheets and sheer weight of capital drove robust demand across the country, but particularly in Melbourne, Sydney and southeast Queensland. In South Australia and Tasmania, performance was relatively flat, and in Western Australia, the Northern Territory and far north Queensland, we started to see the downstream effects of a slowdown in resource-driven activity. The year saw continued diversification and focus on development initiatives from Iris Capital, from White Partners, as well as other groups looking to broaden their investment base and their value-add opportunities with sites. The market responded to some significant changes in strategic direction, most notably the liquidation and sell-down of publicly listed Lantern Hotel Group's assets, the expeditious roll-up strategy of Dixon Group, Red Cape shareholders forming a new investment group for gaming-centric acquisitions and commencing that, and of course the highly publicised and sad demise of the Keystone Group, which fell into receivership. A few other trends emerged and we saw value come back to locations proximate to capital cities and in coastal areas or tourism locations. We saw transactions from Cairns to Phillip Island and Shoal Bay to Sorrento, where capital was lured back into the asset class. And now for the crystal ball. In 2017, the market will eagerly await the outcome of Red Cape's attempted exit from the industry as it rolls into its third year. Everybody will be watching ALH's mood and to see whether their less than acquisitive 2016 approach rolls into 2017. Analysts will, of course, be awaiting the outcome of the Dixon IPO in early 2017 to see how it resonates with stakeholders across the country. And finally, we'd like to thank all our valuable clients for another fantastic year and to wish everybody and their families a very Merry Christmas and a prosperous New Year.